Today in Crypto. While making a speech at the 2021 Shanghai International Blockchain Week, Ethereum co-founder Vitalki Buterin suggested that Layer 2 was the future of Ethereum scaling and the only way to safely scale the network while preserving decentralization. Buterin revealed that the initial phases of ETH2.0 would soon be launched, and the ETH2.0 roadmap would offer scalability. However, base layer scalability for applications will come as the last major phase of the upgrade, which could be years from now. Ethereum scaling is not just an idea, but a clear roadmap where many pieces of that roadmap have either been developed or already been released or are well in progress. Efforts to make Ethereum more scalable, secure, and sustainable have been going on behind the scenes, and the ETH2 upgrades are being deployed progressively. The first ETH2.0 upgrade, Beacon Chain Upgrade, was implemented in December. It introduced staking to the Ethereum ecosystem, and the Ethereum mainnet's merge with the Beacon Chain's proof-of-stake system will signal the end of proof-of-work consensus. The merge is scheduled to take place in 2022. After the merge, sharding is next on the development plan. It is a multi-phase upgrade to improve Ethereum scalability and capacity through the use of shard chains to spread the network's load across 64 new chains. Going further, Buterin admitted that the need to make Ethereum more scalable is a top priority, but Ethereum's native scaling, sharding, would take a long time. Therefore, Rollups, a Layer 2 solution that handles transactions outside the main Ethereum chain, Layer 1, but posts the transaction data on Layer 1, was launched to cause a significant increase in scalability up to a factor of 100. Layer 2 solutions that have been launched so far include Polygon, Loopring, zk-Sync, Optimism, and Arbitrum-1. Buterin pointed out that the current cost to transfer ETH on Polygon is $0.25 compared to $6.84 on Ethereum. Buterin admitted that Ethereum had embraced rollups as a scaling strategy for the near and midterm future, and optimistic rollups, which are easier to create, are likely to be preferred in the short term. However, zk rollups, which are way more complex but more secure, were likely to be preferred for the long term. Zero-knowledge rollups, zk rollups, run computation off-chain and submit a validity proof to the chain, and are much faster than optimistic rollups, which can take about a week for withdrawals. There is still a lot of work to be done despite the upgrade in technology and applications to rollups, and Buterin urged application developers to actively work on adopting rollups as soon as it is safe enough. Finally, Buterin added that non-financial applications could switch to rollups to help reduce fees as users were growing wary of high fees. Other applications that could benefit from rollups are NFTs, Ethereum Name Service, ENS, light clients, and decentralized autonomous organizations, DAOs. Continue reading on BTC Peers. The Ethereum network is poised to make another move towards Ethereum 2.0 on October 27 at epoch 74,240 with the Altair upgrade to Beacon Chain. According to an Ethereum Foundation blog post, the Altair update is the first scheduled upgrade to the Beacon Chain. It introduces several features like support for light clients, pre-validator and activity leak accounting, a rise in slashing severity, and cleanups to validator rewards. Interestingly, the Foundation has described Altair as a warm-up upgrade for the Beacon Chain and its associated clients. It will essentially bring several main features to the Ethereum 2.0 network. The first feature will be the introduction of sync committees for light client functions, allowing light clients to easily sync up the header chain with low computational and data costs. While the second feature is an incentive accounting reform that offers three main changes. Thirdly, the update brings about adjustments in penalty parameters that make inactivity leaks and slashing more accountable than in the pre-Altair era. There will also be three major changes to these parameters. The inactivity penalty quotient will be cut down by 25%, which will consequently reduce the time it normally takes for balances to leak by nearly 13.4%. The minimum slashing quotient will also be cut down from 128 to 64. Putting the minimum slashing penalty at 0.5 ETH, twice the previous penalty of 0.25 ETH. The proportional slashing multiplier will be reduced as well from 1 to 2, implying that the slashing penalty will now double the percentage of other validators that were slashed within 18 days of that validator. Such adjustments can be sensitive to the incentive structure security-wise, as higher degrees of contribution are rewarded and adjusted across the spectrum accordingly. However, this change will not directly affect users and decentralized applications, dApps, currently on the network, as it is an upgrade that impacts only the beacon chain. Nevertheless, it is bound to affect Ethereum users once the transition to ETH 2.0 finally takes place. Continue reading on BTC peers. In December 2020, the Securities and Exchange Commission, SEC, led by Jay Clayton, introduced legal action against Rippe Labs for allegedly selling an unregistered security. The case started a chain reaction that caused a crash in the price of XRP, the token that supports the lawsuit, and its delisting from leading crypto exchanges, such as Coinbase. Related reading: the case, via Twitter he claimed that it seems to be going better than expected. In addition, he commented on the unexpected consequences the SEC is facing due to the pressure exercised by those affected in the Rippe action, the XRP holders. Armstrong said, "Not a Wall Street whale or a big bank. The lawsuit has directly impacted the financial situation of the XRP community as the token was removed from many crypto platforms. Many continue to delist the token as they fear retaliation from the U.S. SEC, as legal expert John Deaton reported. Deaton has been a cornerstone in the Rippe vs. SEC case, as he successfully filed to represent the XRP holders and their interest in court. In addition, Deaton has been reporting on the inconsistencies of the regulator during the trial. The action against Rippe was one of the final important decisions greenlighted by Clayton before his mandate ended. Some expected the current SEC chair Gary Gensler to allow for negotiation and quick resolution of the case, but this scenario is yet to materialize. Related reading: the SEC will not ban crypto, that would be up to Congress, says Gary Gensler as chaos unleashed upon Rippe and XRP holders. Clayton went on to work for the private sector. Currently, the former SEC chair holds the position of advisor for the crypto-based firm One River Digital Asset Management at its Academic and Regulatory Advisory Council. In the meantime, the XRP community continues to organize and push back against the SEC in a case that could significantly impact the crypto industry as a whole. Depending on its outcome, people like Armstrong seem to understand and the potential dangers it could bring to crypto-based companies. As Bitcoinist reported, the current SEC chair has been pushing for more power to regulate the crypto sector. If Rippe wins the case or manage to negotiate with the regulator, other companies, crypto projects, and their communities could ensue with a similar result. Related reading: Rippe, XRP, launches $250 million creator fund to bolster NFTs on XRPL. The same could happen in the opposite case, but instead of a legal precedent in favor of the crypto industry, the regulator could have the grounds to crack down on every asset they deem a security. It could be a long list based on Gensler's recent comments on the matter, especially towards DeFi. At the time of writing, XRP trades at $1.11 with a 1.5% profit in the daily chart. In the world of technical analysis, any tool that gives the trader insight into the next possible market move is valued highly because an early signal of impending price action can turn an average trade into a multi-bagger. In a rare occurrence, Cointelegraph Markets Pro just posted a VORTECS score of 98, one of the highest scores ever recorded, for an altcoin called Everipedia. IQ. The project is a blockchain-based encyclopedia that has the vision of creating a world where all knowledge is available to all people. Continue reading on Cointelegraph. Many non-fungible token (NFT) marketplaces are allowing digital collectors to identify artwork based on the wallet address of its creator through a partnership with software giant Adobe, Nasdaq ADB. In a Tuesday announcement, Adobe said it would be partnering with major NFT marketplaces including OpenSea, Known Origin and SuperRare to allow users to verify the authenticity of the digital content. Adobe's content credentials can add an NFT creator's wallet address and social media information to the metadata of tokens listed on the marketplace. Continue reading on Cointelegraph. Hit the like button and subscribe to the channel.